Welcome, everyone, to another episode of Counting on Chazin, the series that helps nonprofits achieve their mission, vision, and values, understanding strong financial skill sets. Today, we're talking about nonprofit basic accounting, what you need to know. And I think for a lot of us, this is an intimidating concept, but as we are representatives of our organizations, if you're a board member to somebody on the C-suite, there are certain things that you need to know in order to be really efficient. Today, we have Maria Injic with us, Director of Client Services from Chazin and Company. Welcome, Maria.
Thank you, Julia.
Hey,
glad to be here.
I am delighted that you're here because I've got to really fess up. This is an extremely intimidating part of the process for me. And as a board member, I was so afraid to ask questions because I didn't want to appear dumb and I didn't want to appear like I wasn't on my game. And so I'm going to be really excited to learn from you because I think if I had known these things earlier in my career, I would have been a stronger board member. Mm-hmm. But before I get to that, talk to us a little bit about what a Director of Client Services does for Chazin and Company.
Sure, Julia. So I'm responsible for our clients' financial statements to make sure that they're done timely and accurately by all our accountants and controllers and managers to make sure that they have what they need to make smart financial decisions.
Wow, that's a huge concept. I know you work with nonprofits throughout the country and you have a lot of different types of nonprofits. So you are working with everything from maybe a cultural institution to a food bank? I mean,
sure. We have food banks, we have art museums, we have homeless shelters, we have associations, we have schools, churches. So any 501c3, 501c6 fours, we're helping them all out. So
I love it. I love it. Well, before we get any further, let me reintroduce myself. I'm Julia Patrick, CEO of the American Nonprofit Academy. It has been a joy and a terror, to work with Chazin and Company on this series of really extensive skills-based learning about accounting and finance. And what's so remarkable about this, Maria, you and your team have provided this for free. You don't have to be a customer of Chazin and Company to get access to these amazing videos. And again, as I said when we started off, shoot, if I had this as a young board member, I would have been so much more efficient because I had to kind of figure things out or learn on the side, which is the wrong way to do it. So let's get into it. First off, the biggest question I think a lot of folks have is, why do we need to really understand financial management and all these terms when we're a nonprofit?
Well, Julia, we can't really move the mission forward of any of these nonprofits unless we understand where we are financially. I mean, let's be honest, we need money to do things. And we need to be spending that money responsibly and resourcefully. And the only way to do that is to have good accounting in place.
Yeah. You know, that cuts to the chase, and I love it. And I think you're right, because so often in the nonprofit business, we kind of lead from the heart and maybe not the head. And maybe this is one of those things that can get us, to making better decisions and being more strategic. Maria, one of the things that I've noticed that accountants often use this term GAAP. And I would love for you to really help us frame this conversation with what GAAP, GAAP, actually means.
Yeah, GAAP stands for Generally Accepted Accounting Principles, and they're required for public companies. They're not required necessarily for nonprofits, but it is best practice. And it allows companies to follow the rules and regulations of the accounting world so that everyone, when they're reading the financial statements, they can compare one organization to another organization. They know they're recording things accurately and appropriately, and there's no confusion, and there's consistency year over year. And so GAAP is sort of the law book for accountants.
How often is that changing?
Oh, it changes frequently. So we have, yes, we do have groups of folks who lobby and, look at new practices. I mean, new things such as cryptocurrency come up, require us to adjust that. COVID, we all learned we had to pivot with some of that. And, donors need other information, and sometimes it provides more clarity when they are able to adjust some of those rules. But the basis stays the same. So
then let me ask you a follow-up question to that. I mean, you have GAAP, you have the generally accepted accounting principles. Are there different things that filter down then for nonprofits that might be a little different, or do we just still funnel up to what the general concepts are?
Well, the general concepts stay the same, but they're not always applicable to nonprofits because of the differences that nonprofits have. Big corporations don't have donors, so nonprofits have rules around donations or pledges. So there are some key differences that it's important to recognize what those are.
As we understand more and more about why this is an important concept, from GAAP to just running our organizations, nonprofit, as they are businesses, and with all of those structures in place, why is it that we have these barriers to financial management? Well, if you look across the landscape, what do you see?
Well, I think one of the biggest barriers are people are intimidated by the language of accounting. They don't know what it means. We don't learn these words like intangible assets or depreciation as a child in school. They're very specific to accountants. Just like surgeons and doctors have their own language, we have our own language. And I think that scares people when they don't know what those terms mean. And then the accountant speaks so fluently about these terms, and people get frustrated or lost, or they're embarrassed, as you said, to ask questions. So I think one of the biggest barriers, it's not the mathematical ability to do accounting, it's just the language and really understanding what those key terms mean.
Yeah. Okay, Maria, I'm chuckling and I'm raising my hand because I think you just described me. I really do. I mean, as I started my journey, serving on boards, I think what you just said is really true. And when you're a board member, it's such a big deal, and it's such an egotistical deal in many ways. And then you're sitting around the room with really high functioning executives, generally from the community, that have achieved certain things in their world or their sphere of influence. And then you're like, oh my gosh, I don't know something. And then there's self-doubt, and then you're afraid to ask. So I appreciate you saying that. Well, given that we do need to learn and we need to dig into this, are you ready to teach me some things, as well as our viewers, on Counting on Chazin?
Of course I am, Julia. I will try my best.
Okay, let's start off with, I think, the right place to start, a balance sheet. What is that? Why do we need to know that?
Well, a balance sheet is actually called something different in the nonprofit landscape. So a balance sheet is called the statement of financial position. And I think that sums up a balance sheet. It tells you at a point in time how much money the organization has, or assets such as buildings or books or other fixed assets that they may have, versus what they owe. So any bills they have outstanding, any loans they may have. And then the result is their net assets, which is essentially what in the for-profit world is called owner's equity, but it's what is left at the end of the day. So a balance sheet is a point in time picture of the organization's financial health.
Let me ask you this. How often should, and I'm going to go back to the board member position, how often should we be seeing that information? Is that a type of report that should be put in our board packet, or is that going to be something that we just see quarterly or at the end of the year? Like how should we interface, I guess is my question, with this information?
So the balance sheet is extremely useful, because if the balance sheet accounts are accurate, then you know that your income statement, which is your statement of activities, is accurate. So it's important to make sure that the balance sheet is reconciled on a monthly basis. Now, as a board member, you should probably review that balance sheet whenever you get a financial packet. So if you're getting a financial packet quarterly, it should have the balance sheet in it. If you're getting it monthly, it should have the balance sheet in it. Balance sheets are usually provided using a month-end date, because that's a nice comparison at the end of every month or the end of every quarter. You don't want to have a balance sheet run on April 17th. You try to do it, or, May 19th. It's much better to do balance sheets at the end of a month.
Yeah. Good advice. And that is allows you to really be consistent and understand what the trends are and navigate that. So then let's move on to, you mentioned that income statement.
Mm-hmm.
What kind of tool and information, again, is that going to do for us?
Well, a income statement in the world of the nonprofit is called a statement of activities. And I love it, because when they reframed these words, they made these words very basic so that board members can understand them. You hear income statement, you say, I don't really know what that is. And you see your statement of activities and you get it. It's like, oh, it's the things we're doing and what they're costing to do. So it's your revenue minus your expenses.
Right.
So that is your statement of activities.
Okay, Maria, that's really helped me a lot. And I know it's helped a lot of our viewers. But let's talk about the statement of functional expense.
Mm-hmm.
That sounds a little like perilous.
Yes. So the statement of functional expense, and this is a statement that the for-profit world does not have at all. So most board members are not familiar with what this statement provides, but it's extremely valuable. And donors look at this because it breaks your expenses from your statement of activities into 3 different buckets: your programming bucket, your administrative bucket, and your fundraising bucket. And most donors want the the programming bucket to be the highest. So what that means is all, the money that is being donated should be spent on programming primarily, as opposed to administrative functions or as opposed to fundraising functions. So the good rule of thumb is to keep that programming number around 70% of this total statement of functional expenses. So the other 30% can go to fundraising or administrative, but that is really a kind of a key point, between 70 and 75%, depending on what industry you're in. So,
right. And that is a big conversation that I know all of us across the sector are having because of this. Where are we spending our money? As the donors and our funders, and our social investors, people that want to invest in a specific outcome. They're looking at this. Last but not least, statement of activities. Explain that a little bit, because you have mentioned that and how we need to be looking at all of these different ecosystems. Can you kind of help us to understand how this information dovetails into all of this?
Sure. So the statement of activities will show your revenue from all your programming, your revenue from your fundraising, and then any expenses associated with those programming. So perhaps it's salaries, perhaps you had to buy books, or you had to buy playground equipment, for example, at a school or at a after-school program or a club program. So the statement of activities shows your revenue that you're collecting from both donors, and if you have programming revenue, as well as the expenses associated with those activities.
Interesting. And again, on this report, on the statement of activities, would that kind of be like the balance sheet, and that's more frequent, and that's going to be something that you need to track as a board member specifically, with more frequently, or is that something you can kind of push along?
No, the statement of activities can be reviewed at any time. It could be reviewed on April 17th if you wanted to review it, because it'll tell you how much money we've brought in and how much money we've spent. So the statement of activities is key, because that'll tell you, are we spending money appropriately? Are we spending money too quickly? Are we spending money, not as quick as we need to be spending that money? Are we delaying some spending? Where do we need to spend money? So the statement of activities really guides a board member, and that can be run, like I said, any day it's useful, and it'll tell you, hey, where are we at right now at any given point in time?
Yeah. I've got to ask this question, and this might seem like it's come out of left field, but I've been on boards where there was a strong finance committee, and I feel like sometimes board members are like, yeah, that the finance committee takes care of that. I just need to pay attention at the end of the year review or whatever. But I think what I'm learning from you is that it's for everybody. We can't be separating off that committee versus just the general board members. Is that a fair statement?
Oh, yes. I mean, the finance committee is going to, work closely with the finance department to make sure that the statements are accurate and they're providing useful information to the board. But it's the entire board's responsibility to review those statements and ask questions, because you're looking at it from a different lens. And as an outsider, you may see something that, makes you wonder, is this right? Is this how we should be spending our money? Or why are we spending our money this way? So your insight is extremely valuable as a non-finance member, board member.
That's cool. I love how you phrase that, a non-finance board member.
Thank you, Julia.
I'll tell you, you know why I like that, Maria, is it kind of gives you permission to raise your hand and to say, yeah, I'm not a professional in this. I'm a professional in that. And so I need to bridge the gap so I can be a better steward for the organization. So another big thing that creeps into accounting dialogue and procedures and planning and strategy is this concept of temporarily restricted and permanently restricted. Let's just use the word restricted funding. Can you help us to understand that a little bit more?
Yeah, sure. I mean, that's another term. Those are terms that are not used in the for-profit world very frequently, if at all. And those terms actually have changed recently. When you asked, does GAAP change? And now this isn't really necessarily part of GAAP, but yes, things do change in the accounting world. And to make things clearer for those reading the financial statements, they actually have broken those down into two categories: with donor restriction and without donor restriction. And I think that's very easy to understand. So it's, yep, these funds are restricted, or no, these funds are not restricted. You can spend them how you want. Now, there are things called permanently restricted funds, as we talked about. So those are funds with donor restrictions. And those funds usually are invested, like their corpus is invested, and you can only use the earnings for something. So those are what we would consider permanently restricted funds, funds with donor restrictions. There are other funds, temporary restricted funds, so also funds with donor restrictions. And those funds usually are restricted based on the time when they're going to be spent or the purpose of what they're going to be spent for. But temporary restricted funds are usually spent entirely down at some point, whereas permanently restricted funds are not, that hence they're permanently restricted for the long term. Obviously all organizations prefer to have unrestricted funds so that their hands are not tied. So,
well, I've got to ask you a clarification. So when you think about like endowment, or endowed chairs, endowed programming, that would fall under that permanently restricted category, correct?
Correct. Normally, endowments are normally permanently restricted because you want them to be around for the perpetuity of the organization. And so the goal is you develop a corpus. So say $1 million, and you have a policy, you can only spend up to 5% of that $1 million every year. Because the goal is that those funds are invested and are earning more in the stock market than what you're actually drawing down.
Interesting. Maria, along these lines, and again, with some of this new vocabulary and how things change and evolve, I would say that the concept of trust philanthropy is something that's really was starting to pick up some momentum. And then with COVID, it really changed, and that meaning that restricted funding, all of a sudden the shackles were removed because a lot of donors and funders said, hey, this is a crisis. We're going to trust you, nonprofit, to administrate these funds and steward the community based on the here and now crisis that we're facing. And I'm wondering if you are seeing some of that carry on now that we're moving through COVID. What's the general sense? Are you finding that more people want to have restricted agreements, or are they like, no, you do you?
Julia, that's a great question. This idea of trust funds, those are not, it's not an accounting term. It's sort of a term that has evolved over the last few years, as you mentioned. And as I said, most executive directors, they're going to prefer to have unrestricted funds because then their hands are not tied. They don't have to spend that money within 6 months or or if the grant says you must use it to build this building, well, maybe they don't need a building anymore because their programming has now changed because it's, their folks that they were helping out are no longer in the community. It's more of a remote environment. So this idea of trust funding is a great idea. And that's why the statement of functional expense is so important, because when donors are trusting you, they want to know, how are you spending that money? And that's why they want to see, is the bulk of the money going into programming versus administrative work or fundraising? And so that's a key as a board member to, if you are getting significant funds that donors are saying, hey, spend in the area that you deem most appropriate, that you as a board member have that responsibility then to go look at the statement of functional expense and ensure that your organization is indeed spending that money for programming.
I love that you said that, Maria, because if anything, that hits home the fiduciary responsibility and why we need to know these things, not just pro forma, check off the box, get through the audit, send the information to the appropriate people. But what you just said really, it brings home the concept of us understanding what is going on so that we can make better decisions, but that we can respect what the donor's intentions were.
You hit it. Yep, Julia, that's exactly right. I mean, so that's why it's important that you do it as a non-finance board member, review that, statement of activities and the statement of functional expense and the statement of financial position, because then the health of the organization. Those are just sort of like key health stats for an organization.
I love it's the key health stat of the organization. That's a great way to look at it too. It absolutely is. Okay, this is like one of my favorite questions to ask leaders that serve in the nonprofit sector. And so I'm going to put you on the hot seat, Maria. You've done great so far with my different questions. So I'm going to ask you this last question. And that is, how do board members know when they're proficient with these terms? Like, I don't think this is like a weekend thing that you can watch this video and then be like, okay, the meeting's on Monday and I know everything. I mean, this is going to be a little bit of an evolution. And what does that journey look like for most of us?
Julia, it's like you said, you do have to take some deep dives, take some time to really understand the terms. Yeah. You never should be afraid to ask questions. You can even have a little private meeting, I'm sure, with the finance folks at your organization, just so that you understand, hey, what does this really mean? Because you do have a responsibility to understand what the numbers mean and not just agree with the finance committee. And so that when you're not afraid to ask questions, whether that be in a small group or in the larger board meeting, then you know that you've really mastered the financial statements.
I love that. I think that is brilliant because you are right. With confidence and knowledge, you can be a better leader and you can ask those tough questions and maybe get a conversation started or pivot, the organization. So that's brilliant. Thank you for sharing that. And I think it gives people permission and the understanding of why it is important to ask questions. I also like that you said, you mentioned a strategy that might be like go in and talk to the finance department or on a one-on-one and just say, can you go over this with me or can you help me? Who doesn't want to? I mean, people love, I think, to share what they do in their jobs and, to get somebody that would come to you and say, I want to do well and I want to be a good steward. Can you help me learn?
Well, I think sometimes the finance folks, they're sort of forgotten about at nonprofits. They're in the back, just they're doing their thing back there. And as a board member, it actually shows you care, and it makes those folks also feel appreciated. So it's a win-win for everyone. Yeah. And I will be honest, some of the best questions that I ever got asked from board members that really made me stop and pause and think, are we doing this right? Are we doing this the best way? Were from board members who are non-finance people, the engineers and the doctors in the world. They ask some of the most inquisitive questions that really make you as a finance person pause. And because they're looking at it from a completely different lens. And I love that, when board members are active and they care.
Mm-hmm. And again, you've given us permission to really have that hat on when we're leading and when we're advocating for our nonprofits, because you're absolutely right. That's going to make everything better and stronger. And it seems trite, but no money, no mission.
Correct. I mean,
I
you're
mean,
right, Julia.
it's harsh and it's basic, but truly, if we don't have the funds to do what we want to do in order to achieve our mission, vision, and values, we're going nowhere fast. And so, wow, Maria Injic, you've been really fun to talk with. I've got to admit, I was thinking, oh man, this is going to be a really dry conversation. It's not going to be anything that gets me thinking and excited, but this has really helped me. And I think that for those of you watching another episode of Counting on Chazin, this is a really good place to be. So I hope that you share this and that you get some of your other team involved in this process. But we have a lot of wonderful, wonderful pieces to these series, Counting on Chazin. So many different pieces of the financial discussion. Maria, along with so many of the experts at Counting on Chazin, join us for these snippets of information. And again, they're free. You don't have to be a client or associated with Counting on Chazin. You can log on anywhere and get this really good information in a digestible, easy to understand way. Maria, I'm fascinated by how many of these video segments dovetail to one another. I mean, they really do link up and provide a much bigger picture. If I'd had this years ago when I started serving on boards, I would have been a much more efficient steward of the nonprofits I served, and it wouldn't have taken me so long to catch up and to be more of a value. So I'm really, really appreciative. Again, you can find more of these series at chazinandcompany.com or go directly to countingonchazin.com, and there you will see all of this content that is, again, free for you to learn and to enjoy and share with your nonprofit. Again, I'm Julia Patrick, CEO of the American Nonprofit Academy. It has been fabulous to be here with you today, Maria, and we look forward to being with you again.
Yes, thank you so much, Julia. It was fun.
It's been a lot of fun. Thanks, everybody, and we hope to see you again on another episode of Counting on Chazin.